Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 5th of January. FOMC minutes, high uncertainty around the fiscal package. The minutes from the FOMC's December policy meeting, where the committee raised borrowing costs for a second time in a decade, showed that there is considerable uncertainty surrounding the officials' assessment of the economic outlook. The biggest source of uncertainty derives from the lack of details surrounding the timing, the size, and composition of any future fiscal package that market participants began to discount following the election of Donald Trump as the next US president. What's more, although the officials acknowledged an increase to the upside risks of their forecasts for economic growth, they still see the overall risks surrounding real GDP growth as tilted to the downside. At the same time, they were not hesitant to point out that the committee might need to raise rates more quickly than currently anticipated if there is a sizable undershoot of the unemployment rate in the foreseeable future. We believe that once the specifics of Trumponomics become clear, the officials are likely to be in a much better position to assess the economic outlook and thereby to communicate the future direction of policy. With regards to the recent strength of their national currency, the committee warned that a stronger dollar may hold down inflation. The performance of the greenback may dominate news headlines in the months to come, we think, given that policymakers indirectly expressed their concern that further appreciation may be an obstacle for faster hikes in the future. Dollar-yen had been in a setback mode throughout the whole day ahead of the minutes. The retreat started on Tuesday after the rate tested once again the resistance of 118.60, defined by the peak of the 15th of December. Given the bull's failure to overcome the 118.60 barrier and go for a higher high, we would switch our stance to flat for now. The rate now looks to be trading between that key obstacle and the 116 support hurdle, confirming our stance to stand pat for now. A clear dip below 116 may signal a short-term trend reversal and could initially aim for the 115.40 level and then for the 114.75 barrier. Switching to the daily chart, we believe that the medium-term outlook remains cautiously positive. As such, we would treat any possible short-term reversal as a corrective phase for now. As for today's highlights, during the European day, we get the UK service sector PMI for December. The index is forecast to have slid to 54.7 from 55.2 the previous month. However, given the improvement in both the manufacturing and construction indices for the same month, we believe that the risks surrounding the forecast for the services print are tilted to the upside. A positive surprise could extend yesterday's recovery of the pound. GBP USD started its recovery after it tested again the 122 support zone on Tuesday. The pair now looks to be headed towards the resistance zone of 123.90, marked by the peaks of the 21st and 30th of December, where a clear break may confirm the completion of a double bottom formation. This is possible to bring a short-term trend reversal from a downtrend to an uptrend and may initially aim for the next resistance of 124.30. Another break above 124.30 is possible to set the stage for more bullish extensions, perhaps towards the 125 territory. From the US, we get the nation's ADP employment report for December, one day ahead of non-farm payrolls. Expectations are for the private sector to have gained 170,000 jobs, less than the 216,000 print in November. Although the ADP print is far from a reliable predictor of the NFP number, it could still raise speculation that the payrolls figure may meet its forecast of 175,000. Initial jobless claims for the week ended on the 30th of December are expected to have declined to 260,000 from 265,000 the previous week. This would leave the 4-week moving average more or less unchanged. The final market services and the ISM non-manufacturing PMIs, both for December, are also coming out. Usually the market pays more attention to the ISM index, which is expected to have declined. Nevertheless, following the positive surprise in the ISM manufacturing index, we cannot rule out an increase here as well. As for the speakers, we have Bank of England Chief Economist Andy Haldane. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.